Hello everyone, welcome back to Chapter 10 exercise series with another video of our Managerial Accounting course, ACCT 428. In this video we're going to be looking at exercise 10-8A, so let's read the question together. It says, to open a new store, Enid Tire Company plans to invest $320,000 in equipment expected to have a 4-year useful life and no salvage value. Enid expects the new store to generate annual cash revenues of $400,000 and to incur annual cash operating expenses of $240,000. Enid's average income tax rate is 30%. The company uses straight-line depreciation. What is required here? Determine the expected annual net cash inflow from operations for each of the first 4 years after Enid opens the new store. Okay, this is an interesting question because it's going to measure your understanding of how cash flows or net cash flows is calculated. So let's start with the expected revenues. Okay, so let's say revenue, and this is given to us in the question to be annual cash revenues. Sorry, let me make this smaller. Annual cash revenues of $400,000, right? So the revenues that are expected to be generated at the end of each year is $400,000. And then, of course, we're going to subtract operating expenses. So I'm going to write that down. And this is also given to us in the question here. The annual cash operating expenses of $240,000. So $240,000. Okay. And then we need to also subtract depreciation expense, right? So we'll write that down, depreciation expense, which we need to calculate because we are given the amount or the cost of the equipment to be $320,000. Okay, and the question told us that it is expected to be used for 4 years, which is going to be the useful life, and it will have no salvage value. Okay, one more important thing to take into consideration when we are calculating the depreciation is that the company uses straight line depreciation method. Okay, so based on all of these factors, we know that for each year we're going to need, of course, to distribute the cost of this equipment over the 4 years, which will mean that the depreciation is going to be calculated as follows: $320,000. This is the initial cost, minus the salvage value, which is 0 in this scenario, okay, and then divide this by 4, right? So basically we're dividing $320,000 by 4, and that's going to give us an annual depreciation expense of $80,000. All right. Now, taking the sum here is going to give us the income before taxes. So $400,000 minus $240,000 minus $80,000. And that's going to give us $80,000. Okay. Now this is the amount of income that we are going to apply the tax on. So the tax expense at 30% tax rate. Okay, so 80,000 multiplied by 0.30, which is 30%. That's going to give us a tax expense of $24,000. Okay, and that is going to determine our net income. Or our after-tax net income, which is going to be $80,000 minus $24,000. That's $56,000. Okay. Now, very important thing to do here is to add back depreciation. Why? Because depreciation is not a cash expense, right? So it's not really paid out actually in cash, right? It's an expense that we deduct on our income statement, but it's not really paid out in cash. Okay, so we're going to need to add it back in order to figure out our net cash flows, right? So I'll say add back depreciation, which was how much? It was $80,000, right? So we're going to add back this $80,000, and that's going to give us the net cash flows. Okay, 56,000 plus 80,000, that's going to be $136,000. All right. Now, another very important thing to keep in mind is that this is going to be the net cash flows expected for this investment for all of the years, right? Except for the first year, because in the first year we're going to have something a little bit different. We're going to be paying for the investments, right? So we're going to be paying this $320,000 as a cash outflow to actually buy the equipment, right? So you could maybe write down something like this. Okay, you could say let's use a different color. The expected net cash flows for the years 2 through 4 is $136,000 a year, or per year, whichever way you would like to write it. However, for the first year, we need to consider the costs of acquiring the equipment which is 320, what was it? Yes, $320,000. Thus, the net cash flow for first year is expected to be, and then we calculate 136,000, which is this, as a cash inflow, minus the cash outflow expected in year one, or in the first year, which is $320,000, which is the cost of acquiring the equipment. Okay, so the net cash flow for the first year is expected to be an outflow of $184,000. You either say an outflow or just put this in brackets. We're gonna get the idea. Okay, and I can explain or show why or how I got this number, which is of course $136,000 minus $320,000. Okay, I hope that you found this video useful. It's a straightforward exercise. However, few key things that you need to keep in mind. As I mentioned before, first of all, you need to know how to calculate the depreciation expense. All the data that you need are given to you in the question. The cost of the equipment, the initial cost, the salvage value will be also given, the number of years or the useful life of the equipment, and the depreciation method that is followed by the company. Based on all of these factors, you can determine the depreciation expense. Okay, you deduct it, you find your income before taxes, you calculate the tax expense based on the tax rate that is given to you in the question, and that will give you your net income. But right after that, you need to add back the depreciation, as we said, because depreciation is not an actual cash payment that the company pays out. It's not a cash expense, right? And that will give you your net cash flow, right? That net cash flow is going to represent the net cash flow for each of the years of the life of the investment, except for the first year, of course, because for the first year you need to consider the cash outflow that is going to be paid to actually buy that equipment. All right, I hope this helps. This is how you do a similar exercise. If you have any questions, please drop them down in the comments. And until I see you in another exercise video, take care.